Now, the latest figures show that more tenants are paying rent, but rental escalations are slowing in response to price-sensitive consumers. That's according to Credit Bureau TPN's third quarter residential rental monitor. Now, it reveals that in the first quarter of 2023, almost 82% of tenants were in good standing. A tenant is classified as being in good standing if all their rental obligations are met by the end of the month. And that number has become even better. Let's speak now to TPN's Waldo to find out more. Waldo, thank you so much for joining us this evening. And he joins us virtually from here in Johannesburg. Explain to us in a little bit more depth what in good standing means. Because I'm sure people are watching and saying, am I in good standing when it comes to paying rent and other things that we need to pay up every month?
Good evening, Marcel. It's a really good question. We classify at TPN Credit Bureau, we classify tenants in good standing as tenants that have met their full rental obligation by the end of the month. That tenant is then classified as in good standing. And although they might have paid late, they paid on time or within a specific grace period that's afforded by the landlord. Ultimately, at the end of the month, the landlord or the property investor have collected their full rental amount from the tenant.
Okay, so what is the state of play now as we find ourselves looking at these numbers in the third quarter? Because by the looks of your latest data, the number of those paying rent in good standing is on the uptick, and that's good news.
It is very good news, and we've seen from quarter one of this year, we've had an improvement from 81.86 into the second quarter of this year to 82.73. And then going into quarter three, we had 83.34% of tenants in good standing. So the beginning of this year, although consumers are under huge pressure, and there's a lot being spoken about inflation, fuel prices, rates, taxes, utility costs. So although those have been on the increase, we have seen that there's a strong commitment by the tenants that rent in the formal rental market to ensure that they pay their landlord. And when we compare that to some of our other statistics, when we look at credit good standing, so the overall consumer credit good standing in South Africa, as of quarter one this year, that's the latest statistics that's available, was only sitting at 63%. Short-term credit was sitting at 68%. Mortgages had a drop from the previous quarter four into quarter one, to 88.35%. So if we overlay TPN's Credit Bureau's good standing of tenants onto that data, we see that people prioritize their bond first, and then if they do not have a bond, they do prioritize their rental obligation towards their landlords.
Now, let's take it back just a couple of years. What was the state of play before? We're thinking about COVID pandemic. A lot of people lost their jobs, or the amount of work that they had decreased. And of course, it was a really tight economic situation following immediately on from our lockdown, as it were. We're not completely out of the woods as yet. But if you look at these kinds of statistics, things are getting better compared to what the situation was back then.
Yes, correct. So if we look at tenants, the residential tenants, they've actually recovered to above the levels that we saw prior to the pandemic. So if we go back to 2019 quarter three, the number of good tenants was at 82.13%, sitting at 83.34%. So we've actually seen that tenants are in a better good standing now than they were prior to the pandemic. If we looked at just before we went into the hard lockdown measures, that was only sitting at 81.52%. The last time we really saw these good numbers were in the late 2016, early 2017, that we've really seen these numbers. Since then, we've seen a gradual decline in those number of tenants in good standing. COVID, of course, dropped and severe pressure on the residential rental market. They dropped to 73%. So since then, they're up 10% from where they were during the hard lockdown measures. And although we expect quarter four to have a slight tapering down as there is additional financial pressures when it comes to consumers during the festive season, we expect these levels to remain around that 83% continuing into next year.
Let's take a look quickly at some of the rental bans. I believe, according to your data, you're seeing a promising growth in the rental band between those paying between 12,000 Rand and 25,000 Rand. But your bigger concern are those who are in the lower rental band, those paying between 3,000 and 7,000 Rand, and then the higher rental value bands, and they're paying 25K and up. Explain to us why there's concern about the lower and higher, and why you're seeing a nice growth in the 12 to 25K band.
So in opposite to tenants in good standing, one of the crucial indicators that we look at is tenants that made no payment towards their rental obligation within a specific month, meaning that they have made absolutely nothing towards their landlords. Now, those paying 3,000 or less a month, they're sitting at 13.4%. If you compare it to the national average, which is only 16.31%. So it's more than double than what the national average is. Considering those paying less than 3,000, that makes up 13.2% of the formal rental population in South Africa. We have, however, seen that number has decreased from 14% prior to the pandemic. In 2019, however, 20% of the formal rental market made up that 3,000 or less. So although there's less people renting in that rental band, we are seeing that those lower rental value bands are struggling to make rental payments or any kind of rental payments towards their landlords. Going towards the opposite, those that's paying 25,000 or more a month. So we classify that as the luxury rental market. That equates to 1.2% only of the formal rental market in South Africa. Now, 5.76% of those tenants do not make any rental payments. Those falling within the 3 to 7,000, they don't. Number of tenants that don't pay is 5.1%. But the real sweet spot is sitting between the 7 and 25,000. Now, the 7 to 12,000 is at 3.64%, and those paying 12 to 25% is at 3.66%. So what we're seeing is that if you pay between the 7 and 25, or you have an investment property in that space, you really see that your tenants are committed to ensuring that they make their rental payment, or at least make a partial payment towards their obligations.
In closing, let's talk about those who actually own these properties and talk about rental escalations. Now, I'm assuming that means you're looking at the year-on-year increases in rent, as pertaining to interest rates going up and that kind of thing. Are we seeing rental escalations as it should be, or are those more conservative? And what kind of impact could that have on so-called property investors?
So you rightly said, we look at escalations, that is year-on-year growth. So how much more is your rental this year compared to the same period last year? And we've seen that although it's still under the CPI levels, it's at 4.84% in Q3 of this year. Interesting again is that we've seen those rental bands below the 3,000. They've actually peaked in Q2 of this year, and have seen a decline in rental escalations. And that's due to two factors. One, consumers are just under huge pressure. The second one is also that we've seen higher vacancies in those lower rental value bands as people either move up into a higher rental value band. So landlords have to have a fine balance between, do I escalate my rentals, or do I ensure that there's occupancy within that specific rental value band? Those paying more than 12,000 Rand a month, so that is the mid to luxury market, they're sitting at 5.13% of rental escalations. If we consider, however, it sounds like a big number, but if we consider what happened in 2016, these were sitting at the 5.5% mark. And since 2016, we've seen a decline in the rate of growth within the rentals. And during the pandemic, we've even seen de-escalations in some provinces as well as in some rental value bands. So there is a bit of catch-up, considering that as an investor, you are paying more for your capital if you geared and you use bank loans to finance these investments. But you also have additional costs in terms of maintenance that's increased above inflation, security that's increased above inflation, and of course, rates and taxes, which has also increased above inflation, and in some municipalities up to 18%. Now you can only look at rental escalations around about the 4.55%. We do expect it to kind of remain in that area as we see that although there's been a slight downtick in vacancies, usually we see a bit of a spike during Q4, and then rental escalations will kind of hover around that area should we see CPI kind of maintaining around about the 5.5% to 4%.
Okay, we're going to leave it there. Thank you so much to mull over there. Thank you so much for sharing your insights and your data with us. That's Waldo Marcus, Industry Principal at TPN Credit Bureau, joining us virtually from here in Johannesburg. We thank him for his time.